Hi, this is Kerry Artak with Wicked Stocks, bringing you an update in the TLT. That is the iShares 20-year Treasury Bond ETF. The TLT is one of the more popular Treasury ETFs, interest rate ETFs out there, high volume. You can trade options that are decent volume as well. And I'm just kind of giving you an update because this is inverse to the interest rates, obviously. So this is the 20-year treasuries roughly. And you can see that October of last year, it fell to a low that had been the lowest this contract had been. I can just move back all the way into really, this was, when was this? 2011. You can go back into the early part, the 2010s, really, back into 2011. So I'm back to this chart here. This is the all-time high for the TLT, March of 2020, when the interest rates were obviously significantly low. This is the COVID, I don't want to get into all the Fed policy and so forth, the Treasury policy, but here we are. So we've got a descending channel top at 96.90 that I'm still anticipating following the settlement about 6 weeks ago above this 3-4 month channel top. This goes back to the December high, actually, about a 6-month channel top at 88.94. And following the settlement above this channel top, we're anticipating 96.90. 96.90 is in itself, you can go back to October 22, a nearly 2-year channel structure. A descending channel bottom at the bottom of a move, if settled above, is considered a significant buy signal. But until then, is our ceiling of resistance. In other words, we can top out at 96.90 in the TLT over the next few weeks. We could test it and fall away through the rest of the year, which means following a test of 96.90, we could get back into another interest rate cycle that is continuously higher. We could fall back to the 82.42 October low within 3 to 5 months or so of testing that 96.90 channel top. And we could even continue all the way south to new lows, the 75.71 channel bottom, within a half a year or so of testing 96.90. 96.90 is a big deal for the TLT. And so from a trader's perspective, if you're long the TLT, you consider exiting your long positions at 96.90. If you like to trade both sides of the market, you could play the short side in the TLT, selling short the ETF itself, or perhaps reaching for, if you're a near-term swing trader, 87, 86 strike out of the money puts that don't expire for at least several months. You could reach for 82 strike out of the money puts that don't expire. I would go a year out on that 3 to 5 month play. You could also consider reaching for 75 or 74 strike out of the money puts. I would go also a year out at least, maybe even further out on that expiration. And that would be the play of the downside. On the other hand, if we close above 96.90, the interest rate environment continues to soften and continues. We probably see a continued reduction in interest rates over that following, I'm going to call that 3 to 5 months. Closing above 96.90, we do have this let's narrow this just a little bit. This is a 4-year channel top at 108.02. So closing above 96.90 over the next few weeks would indicate 108.02. Within, this could be 2 to 3 months, could be 3 to 5 months. This is a 4-year channel top that could absorb buying possibly through all of next year. We could fall away from here through 25, and that's how significant this channel top is. Last thing I'm going to say is a settlement in the coming months above 108.02. And we are pretty much out of the woods, I think, in terms of anticipating the possibility of a continued higher interest rate environment. In fact, I would expect interest rates to continue to reduce. This actually could, quite honestly, mean recession if we were to close above the 108.02 area. But I don't want to go that far. These are just technical price points, and I think they are likely price points. In other words, I do think they represent the dynamic here near term over the next 3 to 5 weeks. 96.90 expected above 88.94, where we could top out through the rest of the year. If we close below 88.94, I would anticipate then within several months, 1 to 3 months, a retest of the 82.42 low from October of last year. I'm going to leave it at that for this week's. Well, actually, I'm not doing this on a weekly basis. This is just an update, a courtesy, if you will. You have a great week, and we will talk soon.